So, hello everyone. Yes, we're Monday, 13th of November 2017. So our weekly charting analysis from LCG. Any questions at any point, send them through to the question and answers box in the chat room. Otherwise, I'm going to run through the kind of favorite assets that get traded through the LCG trader platform. Maybe by now you've probably read through the risk warning, so I'll skip through to the slide of some of the kind of key my assessment of the trend and the levels to watch in some of the key markets. So I'll turn myself off for now and get on with the slide. So yeah, just starting with the euro against the dollar. So we had a bit of a tick higher last week, and this was something I was sort of starting to warn on at the start of the week, was that the progress in the head and shoulders pattern is pretty slow, and to me that was my worry with the pattern to start with, that sometimes when it's just so obvious it's just too good to be true, and that's potentially a risk here. So 117 was the neckline. We broke through it, but we struggled to really make much progress through it past 116, and we find ourselves at a level at the moment with a downtrend on our hands and a bit of a bounce potentially to sell into, which is taking shape a little bit today. We'll look at the chart in a sec. And then we've got resistance levels a bit more specific than I normally am, just because it's been quite a well-defined trading range that we've been in recently. At 115.7 as the support and 116.7 as the resistance. Let's just have a quick look at that. So here's this chart here, the daily candlestick chart, and you can see, yeah, this is why I put the resistance in here at 116.7, pretty much right around where we are at the moment, based on the lows that were put in, just probing below 117 for the neckline basically of the head and shoulders pattern, and it happens to be the 20-day moving average. So it's pretty key, this level at the moment. If we see a close above this 116.70, for me, obviously we're getting pretty close into the neckline at 117. It looks to me like we're looking at a failed pattern and potentially a pretty sharp move to the upside. Another thing to watch out for, we've got quite well-defined trend line, which I don't always tend to use, but when they're well-defined, obviously people are watching them. So we've got that trend line coming down through the highs, which could offer some resistance once we get through 117. But nonetheless, I still think if we close through 116.70, I think we probably break through that declining trend line as well. Why am I still kind of feeling a bit positive on the euro despite the clear downtrend that we're seeing at the moment? Well, one is about these bullish and bearish ranges that you can use in RSI, and typically a really well-defined downtrend will be below 50, which we are at the moment, but it will go into oversold territories. So if we're in a strong downtrend, the price should drop into a really oversold momentum point and then bounce back. If it's a strong trend, it falls away from 50. If it's a slightly weaker trend, it goes up to around 60, 65, and then rolls over from there again into oversold territory. In this case, we've gone from an overbought scenario, and we kind of bounced off the 50 a few times, and then so it was a strong trend bouncing above 50. Now it's into kind of weaker uptrend territory, where we're holding above the kind of 35 level here that I've marked in green. We haven't gone into oversold. It's still more like an overall weak uptrend in the greater scheme of things than it is a downtrend. So that's just one interpretation of RSI. Now, obviously, if we do roll over and get into oversold territory, you have to discount that analysis, but for the moment we haven't. So it's why I'm wondering whether we can actually get any further lower on this euro chart. For now, we're a decent resistance area and a moving average, but the one thing I've mentioned before is that we've had our first 1-2 tests in this kind of zone of the 116.70. Now we're up into our kind of third test. Normally when the levels are fresher, they're better. That in conjunction with the fact that we made a lower low, but barely. We couldn't close at a lower low really. down at the 115.70 level. Again, yeah, just a few reasons to suggest this downtrend's running out of steam a bit. A little bit early to get overly bullish, I would say, at this stage, just because the moving average is still pointing down, so there's no rush on this. But potentially looking at this this downtrend losing steam. And of course, that would make sense fundamentally if you think about a delay in the US tax cuts and also the ECB soon to be tapering QE. Switching gears to the pound, a bit of a similar scenario here, and obviously they're both traded in US dollars. We're seeing a bit of a sell-off in the pound today because Theresa May looking like she's in some hot water. Anyone betting on her being outed before the end of the year, those bets probably going up in value at the moment. Basically, as far as cable's concerned, the moving average was heading lower, but it's kind of flattened out recently, and you can see it in the price action that we're basically in this flat trading range. And the levels that I've got here as far as support and resistance are pretty much unchanged from our last webinar, where it's 130.30.5 as support and resistance. I lowered the resistance down a little bit to 132 because that's where we kind of fell away from recently. But obviously the top of the range more like 133-ish. That bigger question, is 130 still about to give way? It certainly could be, and probably a lot hinges on Brexit negotiations, but is there going to be some total fallout moment where there's just an outright no deal scenario? I don't imagine that's going to happen anytime soon. So that's the reason at the moment. I think perhaps, even though we are seeing slightly lower highs being put in within this range, I'm still biased towards thinking that 130 holds because of this long-term rising trend line that we've got in place here. And again, for the same logic that we pushed into overbought territory, we got pretty overextended, we rolled over, we couldn't hold 50, we had quite a dramatic decline, pulled down to the 130.50, just above the big 130 handle. But we held 35, which has held throughout really the kind of beginning of this stronger period for sterling. So we haven't got into oversold territory below 30 on the RSI yet. We have been hovering below 50. That's why, as a kind of trend follower, you're still hesitant to really get long cable at this stage. But do you want to be really heavily short? I'm not sure while we're above that 35 mark. Clearly, if we get below 35, the price is going to be lower as a result. We're going to probably be at the more like below, or we're going to be like sub 129 probably at that stage. But then you're looking for bounces and you're a bit more confident the downtrend's in place. At the moment, really just a consolidation taking place, and obviously with the benefit of hindsight, sales at 133 and 132 and longs at 130, 50, 31 have pretty much been the more successful trades. I don't think this consolidation lasts much longer. Perhaps a little flush to the downside on political uncertainty, and then we'll have to see whether that downside holds or whether we get a rebound. Catalysts as far as sterling upside, maybe that, well, catalyst for sterling upside, I guess, is when you're talking about cable, is probably more like dollar weakness, would be like one obvious answer there, and then maybe just that we don't see any kind of catastrophe in terms of the Brexit negotiations, like the EU are putting up a bit of a trouble at the moment about the Irish border, saying that basically Northern Ireland has to stay within the EU customs union, when clearly it can't do that. So I think probably what could do it is if the UK just kind of falls into line and offers to pay more like 60 billion as a divorce fee instead of the 40 billion they previously touted. I suspect some of these EU objections on the Irish border and the likes would suddenly kind of slip away if there were more money involved. So maybe something like that, it kind of signs of a softer Brexit. So yeah, switching gears to dollar yen. So yes, again, same thing. I haven't changed the levels here. The same question as well. Does the top of the range hold? Looking a bit more like it at the moment. We've got 114.5 as the resistance, 113 as the support. Why haven't I changed these levels, guys? Basically, we're in a kind of range environment at the moment. We've kind of, in the space of a week, I've kept my same levels in place. They've been proven valid. I had 115 as a resistance. We didn't break it. We held it, and I had 113 as a support. And now we've been testing 113 as support. So the levels are proven totally valid. I haven't changed them because we're still in that range. Once we get a breakout, then obviously we can shift things around. Talk about more like 112, 111.50 as support if we get a downside break here in dollar yen. Obviously, more like 115, 50s, 116s as resistance if we get a break to the top side. Now, the overall characteristic of what we're in at the moment to me is still a range in dollar yen, and you can see that in how RSI has been behaving, because we've not, for quite a long time, slightly overbought here, not oversold here, not overbought here, and down the 50 level here. So we've come down from the top of the range. I've got a slight bias towards thinking that actually we do break to the top side here, but a lot of that hinges on whether 113 holds. If we take out 113, there's not too much in the way of obviously support to me before we get to 111.50, and that's basically sort of the mid of this 108, 114 range that we've been in for a while. We highlighted that reversal candlestick. I can't remember if it was in the weekly charting and weekly market analysis webinar, or if it was in the candlesticks webinar. It's in one of them where we're talking about this. Obviously, this was a nice little shooting star candlestick that called this top at the same level as this old resistance, and we've seen basically this sort of failed first example and then a second example working a bit better, and at the moment we're sort of rebounding off the 20 period moving average and heading to the downside. But again, it's been another one of the examples where not exactly been aggressive selling. Tried to sell off once, tried to sell off a bit more success the second time. Maybe it's a little double top, but it sort of looks a bit more like hesitant selling than the last two examples where we pretty much rolled straight over. Failed to break to the downside. Now we're up here again. Maybe there's a bit less desire to sell off from 114.50. And again, moving average pointing to the top side. So might be more of a scenario of looking at 113 holding, and then if that breaks, looking at more like a sort of 112 to 111.50 holding as maybe another area where the uptrend resumes. Switching gears quickly to Euro Sterling, because again it's kind of a very similar scenario where we're basically in a range, and even though there's a lot of kind of negativity out there about the pound, we're still in the middle of this range. If we're talking about Theresa May being ousted as Prime Minister, you would think maybe there'd be more a negative reaction in sterling, but there hasn't really been. We're still basically around this sort of 189s, the middle of this 87.50 to 90 trading range. It's been getting a bit interesting in the FTSE. Obviously, this some kind of resilience last week in terms of sterling. Also, a number of quite bad retailer results, and just a kind of broader equity market sell-off have all been contributing basically to answering. Our previous question from last week was, will top of the range hold, same as dollar yen, and the answer to that has been yes so far. We've got support at 74.50, resistance at 7600, but as you can see, we're basically even since I wrote that slide, we're down through that support now. So that was the support as of last week. We've come up and tested it, pushed a little bit above, and now we're rolling over. So actually it looks like that 7450 support is turning into resistance. And if the top of the range has indeed held after a few attempts to break to the top side, to me, probably looking at quite a sharp downdraft down to 7300. But again, does that mean that you want to be short equities? Well, that's always a bit of a risky proposition. we are still in generally quite a strong equity market, and you know, no basically no sign on this daily chart of us being in any kind of outright downtrend, more like a push towards the bottom of the range. And obviously when you're range trading, we're kind of in the middle of the range here, so yeah, you're trading a breakout to the downside, potentially a little double top formation, but it's within a range, so you can't be sure that the price makes it all the way down to your target at the bottom end. One way to be a bit more conservative would be just to say 7,300 as a support, these lows down here, rather than down here as 7,200. But I think one thing fundamentally is interesting to note is that the FTSE is turning lower with the pound. So, you know, often you see the FTSE as a beneficiary of a weaker pound. Not seeing that at the moment. So that is a bit of a warning flag. Switching gears to Wall Street. As I see things, simply put here, is that we made a little break through 23,500, but it was a false break. That's how I'm seeing it at the moment, as basically 2,500, the big round number, holding as resistance, and failed to really make any significant progress through there, and perhaps the beginning of a slightly larger correction now. So it was a vaguely kind of bullish pattern on the Thursday, this candle here, where we bounced off the moving average. Now we're rolling over through the 20-day moving average, which is we haven't been below for quite a while. Market obviously pretty overstretched up here at the 85s on the RSI. Now we've come out of the overbought territory, and looks like a larger correction in store. But again, that question mark, do you really want to be selling? Well, potentially if you're a short-term trader, yes, if we're expecting a bit more weakness in the price, but you've got to do so with the knowledge that the bias for this market is to head to the top side. So potentially if we do take out 23,300, which was kind of like the support of this little trading range that we had before we tried that break of 23,500, here was a nice little level on the short-term basis down at 2,300, where we had that kind of attempted sell-off and then rebound back here on the 18th, or I think 19th it was. So it's you know, this move higher was obviously nice in hindsight, but sometimes difficult to pick your entry points. We may be entering a period now where actually there is a correction and some more obvious entry points. Obviously you just have to be willing to take that opportunity rather than being fearful that it's going to be a bigger correction. No particular evidence at the moment that it is. Obviously pulling up to this weekly chart, you can see we're really overstretched, but just still well in uptrend territory. Over to Germany. We've come right down now into the key 1300 level. So this, I've got 1300 just because it's a big round number, but it's these two. That was the resistance of this trading range. That was the support of the trading range, kind of 100 points either side to make a 200-point range. You see that we tried to rally off that 13,100 level and failed to do so, held the 20-day moving average, and we're rolling over to the 1300 level now. All of these are potential support levels. Obviously the market looks soft at the moment, but overall we're still in a kind of uptrending environment. So question is, do you buy at these lower support levels, or maybe you wait for a little rebound first? That's obviously a preference, but still market generally looking strong. We're basically at the moment put in a big weekly engulfing candlestick, which obviously is a bearish pattern, but it's yeah, it's within the scope of a strong uptrend. So at the moment, I'm assuming that we hold this old resistance, which is 12,900-ish, through the sort of 1,300 area, and the old resistance holds as support. That's the assumption to make. If that gives way as support, then obviously you can start making new assumptions that actually we're perhaps coming down to test lower levels. Switching gears to metals. So gold has been grinding along this 1265 level for a while now. I've actually just put in a little rising trend line just because there's 3 nice touches in there. Again, a similar scenario with looking at an asset versus US dollars, where we come out of an overbought territory. We've come down in a sell-off, and a couple of times here we've just not quite been able to get into oversold territory. Actually 37 working quite well as support on the RSI for gold. So where here it was more like a classic range trading scenario. We were a little bit overbought, oversold, almost overbought, almost oversold. More recently, really overbought after that strong uptrend and not oversold. So it's still room for gold to do all right here. What we probably just need is a decent push through that 1290 level, which was the 1290/95, which was these peaks here, which has been a bit of a pivot. Ticking over to Brent crude, just got it on the weekly chart here as a little reminder as to the kind of strength of the trend line that we broke. We've obviously been up for a few weeks in a row now, and we've come just shy of the 65 level in Brent and pulling back a bit. To me, the price trend looks very good, and we're consolidating a little bit. We've had a few inside bars in this kind of 63 to 64 range. Oil is a pretty volatile market, so I'd probably assume there's going to be a correction here, but I wouldn't necessarily want to be trading it. Be looking more for like 62, probably into 61.50, in around this previous peak around here to maybe hold as a support before we resume the uptrend. Failing that, the 60 level is probably the big line in the sand as to whether the long-term holders keep hold of Brent. When I say long-term, they're more like the momentum, long-term trend followers. Whether they hold on to Brent or not probably is going to be a lot centered around 60. And I can have a look at Aussie yen rolling, absolutely. Let's see how. Let's have a look at the weekly first. Well, I mean, it looks, we're stuttering a bit, but otherwise kind of looks okay on a kind of weekly basis. You're kind of looking at, that was the kind of level we were looking to push through. We've held up at these sort of levels. We were obviously in this solid downtrend. Now we've corrected it, run out of gas a little bit, and had that bearish engulfing week a few weeks ago, but not done much since. Still generally positive on a weekly basis. It looks like that weekly moving average rolling over a little bit, still above the 50 mark, but really testing it. So from a kind of from a weekly perspective, still just about hanging on, but it does seem like we're kind of losing a bit of steam here. Maybe you kind of draw a line through there, you draw a line through here. It's a series of lower highs on the RSI pointing to some rollover in momentum, so basically a divergence, negative divergence taking place on the weekly chart. And then if you go down to so you've got that negative divergence on a weekly chart, and then if you scroll down to the daily chart, you can obviously see that we're coming down here and potentially taking out a second support level, basically making lower lows and lower highs. So I'd say it's there's probably room for more to the downside here. It looks like we're taking out this low as we speak. In the context of that wider divergence, we're probably at a bit of a tipping point here in Aussie yen, where the uptrend's just about in place on the weekly chart. So if we rally from here, then probably the uptrend resumes. If we start giving out these current levels, then we're probably in for a bit of a bigger downturn, with the daily trend pointing downwards now and that weekly divergence pointing to an end in that weekly uptrend. So it looks like we're taking out support here, and I'd basically say the 85.50 level is the next support, which is that perfectly that low there. 85.50 slash, I guess you could say 86 more conservatively, which are these lows up here. And then that's probably the key level that needs to hold. Could get some buying interest there, but to me, my bias would be to assume that 86 gives way. If we do get a bounce from 86, I'd be tempted again to take it again to the short side of maybe the you'd see some potential resistance, potentially 86.50 up to 86.50, 85.50 up to 86.50 up to 87. Sorry, mumbling that. Okay, thank you very much, everyone. I'm going to call it a day there. Good luck for trading for the rest of the week, and I will in fact not see you next Monday. It won't be me, it will be my colleague Ipek who will be running the market analysis webinar. I'm out in the Far East for a couple of weeks, so I'll be missing the next couple, but Ipek will be in here to run the shows. Thank you very much, everyone. Jasper signing out.